Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be discussing a number of key trends and topics this week, including the upcoming halving, the price of Bitcoin, the decoupling we've seen once again between the Bitcoin miners and the spot price of Bitcoin, and of course the huge chunk of debt that was repaid by TeraWulf, totaling in excess of $30 million, and what this means for the company heading into halving. Now, before we get into that, please take a second, hit the like button, you guys. It's 100% free to do. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below what you thought of this move by TeraWulf, your outlook in terms of the price of Bitcoin heading into halving, and your thoughts on why we're seeing the miners decouple from the price of Bitcoin itself. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, the highly anticipated Wulf Pack returns. We're going to be discussing TeraWulf's debt repayment plans. They just made a $30 million repayment towards their debt. Obviously a huge step in the right direction in terms of balance sheet strength as we approach the halving. So we're going to be talking about that in a second here, Anthony. But before we do, we quickly wanted to touch on the price of Bitcoin. So we'll get into that right away. How are you doing this morning?
Very well, thanks, Bryce. Very well. Good to be here.
Likewise, I appreciate all the kind notes from everyone in the comments yesterday. My throat's still a little sore, Anthony. I've been doing the Wolfpack howl all weekend here, and it seems to have taken a toll on the throat. So we'll get into that in a second, but I wanted to talk about the Bitcoin price because yesterday, I believe we had the 5th highest close ever in terms of Bitcoin price. And we're starting to see a lot of our thesis and our plans, I guess, come to fruition here, Anthony, right in tandem as we approach the halving. So a very exciting time. So I've got, again, some of my favorite posts I've seen on X over the last couple of days, and I wanted to kick it off with this one. It actually talks about Larry Fink and his comments on Fox Business interview, talking about the IBIT ETF being the most successful ETF in the history of ETFs, Anthony. So we've talked about this phenomenon a lot, but I really do think this has changed the entire landscape and really the game for Bitcoin, Bitcoin mining, and Bitcoin investing. So let's dissect this a little bit, Anthony. How big of impact do you think these ETFs have? And do you think this buying pressure is sustainable at this point?
Oh, I mean, without a doubt, there's been a massive impact. Nobody thought it would be as big as what's happened here. I mean, we've just literally had 3 months of constant buying. We've also seen, the GBTC ETF, release a lot of their Bitcoin on a daily basis. A lot of that's been sold off. But these approved ETFs that go back to, early January, they've been filling their treasury departments with Bitcoin on a daily basis. And there's been, I'd say most of the days of the last 3 months have been really, really green. The impacts of that, I mean, if you look at the ETF itself and compare it to like the gold ETF, the Bitcoin ETF achieved what the gold ETF took 2 years to do in the first 2 months. So that just gives you an understanding of where, sentiment is at the moment. And sentiment is growing in this space, still needs more adoption. I always tell people, where are we on Bitcoin? And I say, think about the iPhone, think about, the iPhone 3, and I think the iPhone 15 now. We're probably at iPhone 3 level in terms of adoption. We need to get to iPhone 15. So that's a good way of sort of looking at this position. But there's no doubt whatsoever, this move into the ETFs has brought the Bitcoin price to where it is. I mean, we were looking at 40,000 in January. Even some of these top analysts in New York, the Cantor Fitzgeralds and the JP Morgans were sort of, saying it'd be 40,000 round about the halving date. And now, sort of 65, 70,000 feels like it's normal. We've had so many days at that level the last few weeks. It just seems to be the norm. And yes, we know it's volatile. We know that the price changes yesterday. There was an outflow yesterday of over 200 Bitcoin. So what that means is more Bitcoin was sold yesterday than purchased by these ETFs. But, on another day, that can be the reverse of that. And we've seen more reverse of that than we've seen selling. So, it's a really, really good place to be in a moment.
It most definitely is, and I love your iPhone analogy, Anthony. The next visual here, it's from Bitcoin Magazine, and it talks about digital scarcity. So what you'll see on this graph, you guys, is the various different stages of halving and the block rewards at each stage. What you'll notice is this is actually only the fourth halving that we're going to be approaching. So although for a lot of us who are involved in the Bitcoin space, it feels like Bitcoin is the whole world and it's been around forever, in reality, Anthony, there's still over 115 years of Bitcoin mining still on the books. I think it'll go out till 2140 or something like that. So we're still extremely early in the adoption curve. And what the other line on this graph, the orange line, shows is the amount of Bitcoin that's actually been issued. So over 94% of Bitcoin that will ever be mined or created is already in circulation. And we're now only 10 days out from the halving event, which we obviously know is going to impact the new supply. So when you talk about hard money, stock to flow ratio, digital scarcity, this is really it at its finest. What do you make, Anthony, of the amount of Bitcoin that's currently held on these exchanges? It's nearing lows that we've ever seen, and the amount of pressure that's going to be put on these ETFs to source this Bitcoin post-halving.
I mean, it's like everything. Anytime there's a demand for a commodity or a product, the price rises. We had this in COVID. I mean, remember when COVID started and supermarkets were selling out of toilet rolls quicker than they could, get them brought in, and supermarkets made money out of this. They rose the prices on some of these items. And this is going to happen in the Bitcoin price as well. If there's not enough out there to buy, people have to pay a premium for that to get it. And there will be levels at which people will sell Bitcoin. But we've known over the last 2 years that predominantly about 70% of people have not moved their Bitcoin. So that tells you that a lot of people out there that have got Bitcoin don't want to sell it at all, and are happy to keep it. But there might be prices in the future if it gets to a certain level that people think, you know what, I'm going to sell a little bit of it now. So there will be, maybe a little bit more in the market as the price rises. But, if the ETFs carry on like this, there's only one way the price can go, and that's upwards, because it will put pressure on, on them ETFs to try and source. You're quite right. Try and source those Bitcoins, because there's only going to be in less than 11 days time, there's only going to be 450 Bitcoin mined per day. Some of these ETFs are buying, been buying 5,000 a day. That's 10, 11, 12 days supply of the current supply. That's not, you can't sort of like purchase that amount if there's no supply out there. So the only way you can do it is where the price will go higher, and people then have a decision then to say, well, it's reached a point where I can take some profit now and achieve what I've wanted to achieve. But I imagine there'll still be a lot of people, those that hold it in their wallets, wanting to keep hold of it, because if any of the predictions are, half right, it's going significantly higher over the next few years.
Most definitely. And that's really a great segue to this next little piece here, Anthony, talking about nation states getting involved. So not only now are we seeing retail, we're seeing Wall Street, ETFs, but we're now starting to see nation states and countries pick up on this and realize, hey, this may be a great way to back our currency and to get control on inflation and devaluation of currency around the world. So this next post actually came from the Kingdom of Bhutan, and they're talking about partnering with Bitdeer to drastically increase their mining capacity by up to 500 megawatts by 2025 to really keep up with pace post-halving. So this is a trend. I know Edward Snowden came out a few months ago on Twitter and said he expects nation states to start coming out saying, hey, they're purchasing miners and creating Bitcoin themselves. Now we're starting to see that in actuality. This is going to be another main player putting stress on the supply of Bitcoin.
Yeah, absolutely. And we know that Bitdeer have got operations in Bhutan at the moment, so that makes it sensible that they're involved in this. When you look at 500 megawatts, we had an announcement yesterday from IREN, who are currently building out their Childress site, and they're getting close to, they've already achieved 8 exahash, they're getting close to 10 exahash, which will be the first, the 100 megawatts of that site there. That's phase 1. Phase 2, to get to 20 exahash, is another 10 exahash, and that's 200 megawatts. So if you look at 500 megawatts, that's potentially 30 exahash of mining. So, that's like effectively having a Marathon Digital in Bhutan all operations, except you obviously want to be mining more in terms of production than Marathon Digital at the moment. You want to be mining probably the 500 or 600 coins a month. But that just puts it in perspective what 500 megawatts is, because people see megawatts, see exahash, and don't really know the correlation. The fact that these machines now are becoming more efficient means that you have you're using less power to mine Bitcoin, so therefore your megawatts effectively can drive more production using the more efficient machines. And so that's it's a good. I mean, before you were probably looking at 30 or 40 megawatts for 1 exahash, and now it's significantly less than that. So, but Bitdeer are based there, so it's logical that they're involved. But Bitdeer are in about 3 or 4 different continents. They're in Norway, they're in the US, they're in Bhutan. They've also got operations for HPC in Singapore, so they're quite well spread out there. And again, it's just it's another update we've seen from them, including Bitdeer. I mean, they seem to be putting things out every week now. So people should pay attention to what's coming out from that company. Start doing a little bit of research. They don't just self mine as well. They do hosted. They have cloud hosting, which is very, very profitable for them. They've just announced they're going into manufacturing their own mining machines, and that's not a total surprise, because if you think where Bitdeer technology were previously, they've evolved from Bitmain. So I would imagine some of that experience, we've talked about it before on previous podcasts, but some of that experience from Bitmain is probably in the Bitdeer team as well. They've got 50 employees specifically involved around research and development. I mean, some mining companies haven't got 50 employees. We had Rob Chang on from Griffin the other day. There's 3 employees in his company. About a year ago, I think Marathon Digital had about 15 employees. They've grown that now because they're obviously taking on their own sites. So a lot of these big miners, you see big miners, big productions, they don't have the employees match it. And you've got Bitdeer, who've got 50 employees just in R&D of their 200 total employees. So that tells you sort of like what they're thinking about going forward, not just satisfied with self-mining, looking at other areas. And this will be a good project for them to be involved in, because they'll be obviously, in the joint venture with the government of Bhutan. And we've seen other countries as well. We've seen El Salvador adopt Bitcoin. We've seen other countries who are keen to do it, where the currency of their country has been devalued so much that it's a challenge. I go on holiday sometimes to Turkey, and the Turkish lira has been devalued in value for tens of years, and the pricing in the shops in Turkey is not even in the Turkish lira, it's in euros, because if it was in Turkish lira, they'd have to be changing the prices on a daily basis. They change that much. So something like Bitcoin in those countries is a real way of having that deflationary approach to your investment. And so this is no surprise. It's just, we just need more of these adoption stories coming out there.
It's very interesting. I don't know if seals are a natural animal in Bhutan or not, but they're about to get a ton of them from Bitdeer and the seal miner team. And it's so interesting, Anthony, to see the difference. You talk about Paraguay, right? Some governments are putting up roadblocks, red tape. Other governments around the world are fully embracing this. And you really start to think about that adoption curve and early adopters. How is this going to change the geopolitical landscape, right? If some of these small countries who have been struggling really start to embrace the future and technology and blockchain and the Lightning Network, there's so many possibilities here. And that's why we're so passionate about Bitcoin, right? As we talk about the mining stocks, but really the miners are what creates this whole network and keeps it operating. And that's why we're so passionate about them. So very interesting development. Congratulations to Bitdeer. Obviously a huge vote of confidence for the leadership team and the company itself. We'll continue to monitor those. Next up, Anthony, we've got the main event, TeraWulf. We know the Wulf pack is alive and strong right now. We've been seeing a ton of comments, and obviously this is a big step in the right direction for Paul and the team at TeraWulf. A $30 million bite out of their debt being taken off, and really giving them a lot more flexibility moving forward, as we heard in the interview with Paul a couple weeks ago. What's your take on this one, Anthony?
I mean, it's a great number, and if there was ever anyone could ever have any criticism towards TeraWulf, it was probably about the debt size, but they've been really transparent this last 6 months about explaining that they have a plan in place to reduce it. They've not gone out there and just like sold loads of shares to reduce it. They've got a plan in place. They've been mining Bitcoin these last few months very, very profitably, and they've been using some of that profit to build up an amount to pay down that loan, and they've paid down 30.1 million. Now on Sunday, I was on a Spaces meeting with Patrick Fleury, who's the CFO of TeraWulf, and he was really transparent and really open and honest with a lot of the questions that came out there, and he had a lot of questions answered, and he didn't avoid any of the questions, and the debt question came up, and he said there would be an announcement in April, as they've articulated in previous monthly updates. And lo and behold, the day after that Spaces meeting, they come out with a great update like this. I mean, 30.1 million is no small amount. We've seen the benefits of reducing the debt for the likes of Bitfarms over the last 18 months. They had $160 million of debt, so they were even in a worse position than TeraWulf, and they did everything to try and get rid of their debt. They were selling machines, selling Bitcoin, doing everything, selling the shirts on the back, I think, on some days, just to try and get that debt down. And they did it, and they did it again. That the final sort of 6 months was very much planned, and every month they were highlighting what they were going to do, and they did that. And I think we're going to get the same from TeraWulf. Some miners are just not going to make it. We've still got a lot of other miners with debt out there. Some of the smaller miners, and we've talked about the likes of Argo Blockchain on the show before, and they had over $100 million of debt in 2022 when the Bitcoin price was falling and the machine prices were falling, and the machines were the collateral on the loan, and therefore it causes a real problem then, because lenders want to have collateral for their loans. They want to make sure they get paid, and so it's been a real challenge for Argo. They have come up. Fortunately, they have come up with they sold the Helios facility to Galaxy. They've sold another site to Galaxy in recent months. And they're down to, probably about 45, 50 million, but they're quite a small miner compared to TeraWulf. I think this is great news for TeraWulf. I think going through now the halving, they've got 8 exahash at the moment. They're growing to 10 exahash in the next 3 months. They've got a HPC business that they're going to start growing as well, like a lot of the other miners. That'll bring in extra revenues, not correlated to Bitcoin price. They've got probably one of the cheapest energy prices out there. In terms of the Nautilus, I don't think anyone can beat 2 cents a kilowatt hour at the moment. And they have a market price at their Lake Mariner site, which is around about 4 cents. So overall, a blended rate of between 3 and 4 cents a kilowatt hour. That's very, very cheap. A lot of the other peer miners are well over 4 cents a kilowatt hour, some approaching 5 cents a kilowatt hour. And when you go into the halving, I mean, Patrick was quite open, and Paul was very open on the podcast we had a few weeks ago. I still chuckle every time I sort of see a snap of that come through the social media. But he articulated that at the price at the moment, around about 70,000, they can mine a Bitcoin at 37,000. 25,000. And then the question was, well, that's 25,000 now, but we're going into a halving in 10 days' time. And he was saying if the price stays at 70,000, their price to actually produce a Bitcoin, all in cash cost, is 37,000. And so even then, you're bringing in 33,000 every Bitcoin you produce, and they produce some 370 Bitcoins. So if you set half of that amount in April, and you might get a little bit more than that, so maybe close to 200 Bitcoin. Once the halving we go through the halving, and we then start seeing some of the less efficient miners coming off. That will benefit the likes of TeraWulf and some of these other miners, because they can keep mining, and so they'll get more production. So 200 Bitcoin and making a profit of 30,000 a Bitcoin on that. That remaining debt, which is 75 million. That will see that come down even after the halving, because they'll have these extra cash revenues coming in.
Well, and what I really liked about this, Anthony, debt can be great, right? It can be a great lever to use, but when the market has a lot of uncertainty, or you're in industries that are very CapEx intensive like this, it's easy to get upside down quick. And it's great to see that TeraWulf identified this as an investor concern. They've taken meaningful steps. And for me, that they're following through on their commitments, right? Because we hear a lot of times companies say, hey, we'd like to do this, or they put out future guidance, but saying something and doing something are very different. And for me, seeing this was just another check on the list for TeraWulf. I'm a big fan of this company. I think leadership's doing the right thing. And you're right, Anthony, this makes them a lot stronger going into halving and looking at maybe future potential opportunities down the road. So a big step in the right direction. Now, we've talked about the halving coming up in 10 days or 11 days quite a bit in this episode, Anthony. So I did want to give everyone a heads up. We are planning our first official live stream event for the halving to coincide with that. So that'll be super exciting. You guys, make sure you mark that down on your calendar. We're still confirming times and everything, but we'll for sure put that out in advance just to let everyone know. We're also monitoring all the price action in Bitcoin this week. Obviously, it's been all over the map, and I would expect this volatility probably to increase going into halving because of that uncertainty. You and me, Anthony, we have no idea what the price of Bitcoin will be pre or post halving, and it seems the rest of the world doesn't either. So it's going to be an exciting time here, you guys. Again, only a few days away now. Anthony, I'll throw it back to you for any closing thoughts, but another excellent interview.
Yeah, no, it was a good topic to go through today. I was looking forward to when they were going to announce that. I wasn't sure it was going to be as high as 30 million, but that just shows, the benefit of the Bitcoin price at the moment. We've talked about 40,000 in January. We've talked about 70,000 now. What we haven't seen in this last 3 months is really the correlation with the mining stocks and the Bitcoin price, and I suppose that's where people are having a little bit of anxiety, but. When days where the Bitcoin price, drops and the miners don't drop as much, that's when there's an opportunity. Maybe that the market's looking favourably on the mining stocks there, and people will come back into the mining stock. We might have had an outburst of investment into the ETF because it's a direct correlation to the Bitcoin price. That's the only way you can look at an ETF. These ETFs have to buy the Bitcoin with the daily amounts that are paid in, because there's no other investment that can actually keep in touch with Bitcoin. That's been proven. It's already over the value of silver, heading on its way up to gold. And if people think it won't get to the gold value, they probably need to rethink that strategy and have a bit more closer look and do some more education in the space, because it seems to be breaking record after record. But as I say, 70,000 feels quite normal now. I think people are now waiting for the next step. So who knows what the halving brings. I think we're into new territory. It doesn't seem to be following quite like the previous cycles. We didn't have an all-time high before the previous cycle. We've had an all-time high now, and who says it might not be another all-time high before the 19th or 20th of April when the halving occurs.
Yeah, and I'm glad you brought that point up about the mismatch between the miners and the price of Bitcoin, Anthony. As we know, we are starting to see a lot of these OTC desks reach out to miners to actually purchase Bitcoin directly. We also know that there's large institutional investments in the main company like Marathon, Riot, CleanSpark. We've talked about that a lot on the channel. So I wouldn't be overly surprised if there's some manipulation going on. Obviously, these Wall Street banks, they understand that miners are crucial to this whole strategy and ecosystem. They also understand that the market cap of these miners is a fraction of that of Bitcoin, and it's a lot easier to start a position, actually get your entry points that you're looking for, maybe on some of these miners compared to spot Bitcoin. So I wouldn't take everything you see as necessarily a negative. A lot of these days, I think it's just jockeying to get these positions built out and make sure they're in a favorable spot for the big run we're about to see in Bitcoin, or the expected run here, Anthony. So a great episode. Thanks so much for your thoughts. I look forward to our chat tomorrow. You guys, if you're still watching, hit the like button. Feel free to subscribe. And of course, leave a comment in the section below. Let us know what you think about the debt repayment from Wulf and your top miner going into halving. Have a great rest of your day, everyone.